So if I make $90,000 a year, according to the federal tax bracket for single filers, that'll put me right here between 85 and 163 at the 24% tax bracket. So I take my 90,000, multiply it times 24%, that equals 21,000 in taxes paid, leaving me a net take-home pay of 68,400. So here's the thing, that's not actually how taxes are calculated. Okay, so let me explain. We're not actually on a flat tax system, and that's a common misconception, that whatever your income is, that's the tax that you pay. We're actually on a marginal tax system, and so let me show you how this works. We have 7 different tax brackets, and depending on your income, you fall in one of these brackets, but you're only going to pay 10% of the first $98.75 of your income. Then you're going to pay 12% of the difference between $98.75 and $40,125. Then once your income is above this amount, you're going to pay 22% of that difference. And in the case of $90,000, you'll pay 24% of the difference above $85,525. So in the case of the $90,000 salary, reaching up to the 24% tax bracket, you're only going to pay 10% in taxes of the first $98.75. Then you're going to pay 12% of the next $30,250. Then you'll pay 22% of the next $45,400. And then the remaining amount above $85,525 is $4,475 in taxes. You add all those up, and that's the total amount of tax you pay. And that's your take-home pay right there, $74,320 instead of $68,400. So that's a big difference. If you have the misconception that we're on a flat tax system, you'll be thinking that you're paying almost $6,000 more in taxes and earning about $6,000 less in income, when in fact, you're really earning more and paying less in taxes. So if you go to Google and you type in marginal tax rate 2021, you're going to find that there's actually 4 different marginal systems. What we were looking at was those for filing single right here. There's another one for married filing jointly with different numbers. That means both spouses combine their incomes together, and then you figure out where your combined income is. There's another one for married filing individually, where you're married, but you're both picking your income based on your tax bracket. And then there's a 4th one, married and head of household. And so find out which one is best for you, and you can save on your taxes. The main point of this video was just to share that there's a difference between the common misconception of a flat tax system and how the marginal system actually works. For your own situation, I would encourage you to talk to your CPA and get legal and tax advice from them. This is just an informational video, and I hope you found value in it today. So my question to you is, what tax bracket are you in? Please leave your answer in the comments below. And as always, subscribe to our YouTube channel for upcoming and ongoing wealth building tips, strategies, and lessons. My name's Scott McLean. It's not what you make, it's what you do with what you make.